Chief Executive of Independent News and Media, joins us now. Gavin O'Reilly, thank you so much for being on the show today. Now, you've just reported a first half net loss of €17.5 million. What are the reasons behind this?
Well, obviously, there's significant exceptionals in those figures, non-cash impairments. I mean, I think it's important that investors actually look at the underlying operating profit of $34.5 million for the first half. And I think in addition to that, EBITDA of over $50 million.
Yes,
so I think it's actually a pretty sturdy set of results.
Your revenue, though, in the first half dropped from 324 to 284. So I'm just wondering, in general, is business becoming more difficult because we're seeing very dire economic situations, and that's not ready to, stop anytime soon?
Okay, well, if I can just put that revenue figure into context. I mean, obviously last year we had 5 months of the London Independent, which we subsequently sold. So if you wanted to look on an underlying basis, revenue is down 5%. But nonetheless, that does reflect a very, very tough environment out there. Is it getting worse? No. Is it getting materially better? No, not yet. I mean, obviously we are subject to the whims of the Irish market, and I think the economic woes of Ireland, unfortunately, have been well played out on your show and other shows. But I think we are somewhat of a bellwether for Ireland. Advertising in Ireland was down 11%. It had been down 13% the year before. Obviously, we're looking for that to moderate in the second half, easier comps, which is why we're putting the guidance out in the market.
For example, how do you manage how do you propose to manage the rise in digital forms of media? This is something that, of course, we all have to face with. Do you have a trend going forward that this is going to be one of your key perceptions that you want investors to understand?
Oh, absolutely. I mean, we've got a whole spate of digital assets, from our iPad to iPhone apps to other mobile apps. Right now, our digital revenues represent 4% of our ad revenues. We'd like to grow that to 15% over the next couple of years. That's going to be a combination of organic growth and development as the market develops, but also tactical acquisitions.
And so would you, for example, consider, actually, on acquisitions, is there anything in particular that you're going after? How much money do you have in your treasury chest to go after something?
Yeah, our focus right now is obviously on debt pay down. You would have seen we've brought down our net debt to EBITDA down from 5.1 to 4.1. Obviously, we're going to be continuing to pay down debt. We think that's where greater shareholder value gets created. So when we have no immediate acquisitions at this point, but we are a cash generative business, which I think gets lost sometimes in the telling. As I said, there's $50 million of EBITDA there in the first half. We paid down over $21 million of debt in this first half.
All right. So thank you so much, Gavin O'Reilly there.